going on, YouTube audience? Jake again, back with the Crestview and Magnuson episode 4, Macro in the Metaverse, presented from the Crestview and Magnuson presentation room out here on the beautiful beach. This episode, we're going to talk about our markets, our favorite ones, SPX, ES, crypto, Bitcoin, maybe a few smaller coins, who knows. And I also want to go over a couple of trades that I took this past week and how those played out. So without further ado, let's get right into the show, baby. All right, everyone. Without further ado, here we are on the ES daily market indicator. This is the preferable chart that I like to use if you're new. So we always start by taking a look at ES and higher time frames, where we take a look at the overall picture of these markets. So since the last time we saw y'all, nothing's really changed. We're still range bound, capped by, this mid-range here, 4230, range low 3650. And then if you go a little bit deeper, we've got a range within a range, demand at 3800, some demand structure here, last down candle before the up move. And then we've got supply up here, this red box, 4150. And actually took a trade on markets this week. So let's get down to some smaller time frames and see what I saw. So overall, still believe we're macro bearish. We've been in about a 2 months worth of uptrending market. So it's been difficult figuring out shorts to take. Longs have kind of had the easy run for the last month and a half, 2 months or so, but it is what it is. So let's take a look at, let's actually go to the 4 hour and take a look. So again, I mentioned this supply up here, very, very strong. Every time we've seen a run into supply, massive sell-off back in September, 4 or 5% down days. And now here we are. Last week we traded right back into it. Similar result as last time, massive sell-off. So this is one of the things that has given me confidence of this supply zone here. We've had 2 extremely solid reactions trending downward off of these zones. So this is going to be 4150 to 4200 is going to be an area that is going to take a lot of effort to break. If we think that this bear market rally is going to continue. So we'll have to see if that works still, but who knows? Let's go back to the 1 hour time frame. So believe the last time we saw you guys was somewhere in this area. We were trending down, but bear market rally is still here. Tuesday we had the CPI print 7.1% against the expected 7.3. Extremely bullish for the market. Absolute rip upward. And the funny thing about this was actually in the pre-market. 4180 got tapped basically. I don't know if there was a leak or something. I didn't really catch it, but let's dive into the trade. Basically, after seeing that massive run, we hit our supply zone and instant rejection. Even if you go down to the 15-minute time frame, it was just one candle with a long wick and then red following. So I waited, markets opened 4140, 4130, somewhere in that area. That solid rejection. We weren't able to reclaim this box or pierce deeper into this supply. So we knew the sellers were at bay and they were controlling this market. So entered, a short position on, let's call it 4135, let's call it, somewhere in here. Rejection off the supply. stop above it, targeting somewhere around these lows here, maybe even a little bit lower, but that's a 3 risk reward trade right there. Held it. We broke 40.50. I mentioned in a previous episode that was a key level for bulls and for bears. Break above it. The bulls are in control. Break below it. The bears take over for the meantime. As we saw, we got a nice little bounce on Wednesday. Tapped it, bounced back up. Huge sell-off. Could not reclaim. Kept selling off, held the position, and actually closed today about 200 point move. So that's always solid. So yeah, that's my take on using, a combination of supply and demand as well as range bound trading with price action. Again, I was able to enter the position based on my supply and demand and price action. Seeing this long wick into supply followed by more red gave me confirmation to enter. That was the trigger. Could have took some profits at 40.50. Saw this bounce. Wait to see what price does if it makes new highs. Didn't smash below. Could not reclaim back above. No trigger for a stop or a buy. Continue to sell off. Profit target hit. That is the trade. So that was a good one. Let's take a look at what I would expect going forward. At this point, honestly, it's a little bit difficult to understand what the market is doing. No one ever knows what's happening. On Wednesday, I don't think I mentioned, there was the Fed basis rate hike announcement. And like the markets thought, 50 points was the outcome. So rates are still going up. They just slowed from 75 basis points to 50. And I guess the market didn't like that because since Wednesday, it's only been downward. But again, we're now trading within a support and resistance area. Tap this nice 39.10, 39.13 area, trading within this gap here, 39.40 and 39.10. So personally, I'm just going to wait and see what happens. Do I think that this bear market rally continues? I'm kind of here and there on it. This supply zone is killer. Maybe we get another retest. Maybe we pull a little bit deeper into 4,200. At that point, that would be the time to get short. And that's what we'll be doing. We'll be getting heavy short 4,200 if we see it. Until then, might be a little bit quiet with the fingers and staying off the buy button for now, for the meantime. But yeah, difficult market. A lot of mixed feelings and emotions going on in the market. So a lot of things don't seem as rational as they should be. But nonetheless, you make the right play at the right time. It doesn't have to be very frequent. It doesn't have to be, your whole account. Small percentages here and there are going to add up, taking high probability setups. And this was the setup that I believed was the highest probability going forward. And that's why I took it. And it worked out for the best. So that is the recap of the trade from this week. And yeah, equities, kind of a no man's land here. We'll wait to see if we can break above 39.50 and head back up. Test some of these areas. Maybe 4,000 is a big one, psychological number. And then 40.50 again, back to 41.50 and higher. So we'll just have to see. And then if we break down, we break down and the open shorts are, still going to run in profit. We still got some positions open, just a very small portion. Net short is the play in the bear market rally stage of this recession. So there's that. And we'll look to build up a position at another high probability area if we don't get the confirmations that we're looking for as far as higher prices. So there is that. Let us take a look at the crypto market. Let's jump into this Bitcoin review. So what we still got is a range-bound market, just like we saw, from the middle of June all the way through the majority of October into early November before FTX, sent us on a nosedive to some prices we haven't seen since 2018, 2017. But nonetheless, let us jump into it. So we established this range here on the swing low of November 9th, 15.5. The first move really that shows a piece of rejection afterward is what I like to use and define my range low as, because there are going to be stops there that cause this massive pushback up. So the first swing high afterwards is going to be always where I mark my range high. So that's why we've got a range from 15.5 to about 18,200. Let price develop and form high probability setups. So my thought process going into the scenario that we're at was, all right, I know middle of November, we swept these lows on this candle. We swept the previous swing low. So at that point, we did not get any confirmation or close or price action to confirm another leg down. And price quickly reclaimed the range low and actually was printed bullish afterwards. So at that point, my bias is long based, and ending targets are up at the range high. So I believe when I marked out this area here, we've got another micro range forming within a range, and that range also happens to fall near the midpoint of the overall macro range. Keep in mind that, I like ranges to identify like what price is actually doing. And the more you practice and the more that you are patient and the more that you understand how ranges work and how they can help you get profitable setups, the more you'll understand why I've got all these lines on my chart. So right here, we've got the key swing low from June, 17.6. I've always got that marked because we hadn't really closed above it until, this week. And then we've got this green range. Let's drop down to a smaller time frame to take a look at the micro range. And I will show you a trade that I took. So let's take a look at this micro range. Like you can see that this price action is just pinballing this range around the mid range of the overall macro range. That's why I marked it out. We got a couple pushes up from the lows. And then, price started forming this, smaller range within a price range, within an overall range. So swing low, swing high. That is our caps to the upside and downside. We got a pretty clean sweep of the highs early December, about December 5th. Trade back. Again, this mid-range is why I keep it here. It's very key. You can see price just respects it mostly at all times, or if, a big breakdown happens, it gets respected from the underside. Big breakup happens, gets respected again. So that's why I keep that there. Let's talk about the trade that I took personally on Bitcoin. So what I saw, it was I believe, not this week, but the past week. I saw a nice little supply zone up here. I'm going to change the color, so don't worry about it. Oh, okay. Nice little supply zone up here on a 4-hour chart. Let's just make this red so we don't confuse people. I know that the sweep of the low on the higher time frame suggests that I should be long biased in this market. However, this is why I wanted to talk about range trading, because I took a look at the smaller range, the microstructure within the overall range, and I thought to myself, maybe we're going to get a move back towards this mid range, or possibly taking out these really, really clean lows down here. So again, you can trade both sides of the market no matter what the bias is, right? It just depends on what you're looking for, if you're looking at the right things. So I saw this big supply zone up near the area where the swing high was swept, and all those stops are taken. And we got a pretty good sell-off back to the mid-range. More stops in this area, wiped before sweeping these range lows, barely, hardly call it a sweep, but nonetheless, some of the spreads may have closed these positions out. Then we got a hard and fast rally back into supply. So my thought process was, let's actually just talk about this real quick. So you see these like little ranges that are even forming within this already small range. A lot of stops are built up on both sides. So what I've noticed is that typically before a big move happens, a spike to the downside happens. So right here, spike to the downside, killing the longs and activating sell stops, and then rockets upward. Here, range here, all these stops, spike upward, kill these highs over here, and then sell off. Same thing, both directions. So my thought process was I saw this small range building here, and I said to myself, let's wait for the scam wick. I like to call it the scam wick because it's only there to kill stops and then reverse. So basically, I saw the scam wick and rejection, so ended up, that's the wrong way. Ended up taking a short position right on, once it left the supply zone, stop above supply, back to the mid-range. And as you can tell, that trade did hit for a 2.5 risk to reward. With Bitcoin, I can deal with the volatility and in turn reducing my reward versus my risk, but I like to go for, at least 2.5 reward per risk. I like to go 3, 4, 5 sometimes if I can get a good entry. But yeah, this was the trade that I took, played it to the mid-range. I did not think that we would come all the way back down to take out these lows. So that's why I didn't have my take profit all the way down here. It would have been a nicer, I think, 4-1 down here. Yeah. But nonetheless, overall view of the macro picture is short-term bullish. It was short-term bullish up to the highs, but as you can see on Wednesday, we got the sweep. So now it does seem to me that we're holding this micro range. And you can also tell that the previous low of June at 17.6 was broken to the downside, and now we're starting to see some consolidation. So we'll have to see how further price action develops to determine current sentiment. But I'm expecting that. Actually, I'm not really expecting anything because with Bitcoin, it kind of does what it wants. Range high swept, it could continue higher. We've had a couple weeks of, higher prices from 15.5 all the way down here, and we just, played around in the middle, and now we've swept the high on the CPI news and the rate hikes being slowed. So I don't know, maybe for the meantime we go higher, and that would mean probably, I would say 19.2 was an area to look for. I don't have my upside price targets mapped out. Maybe 20,000 is a nice psychological number if you're playing it long. But again, I would say that we have to reclaim the range high that was swept and even take out those stops, and then see price reclaim and accept higher than 18,200 before I would even entertain entering a long position on Bitcoin. So that's my thoughts. I guess for now, slightly more short bias, but I did happen to miss a majority of this first leg down. That's like a $900 move. So, nothing that I can't handle, though. I don't have to make a trade every single day. You miss a move. With an extremely high beta asset like Bitcoin, you don't want to be wrong. So not taking a move or not taking a trade and hoping to catch a move is oftentimes better, then just placing a trade and it goes in the opposite direction and you just get wiped because of the volatility and lack of liquidity. So yeah, it's kind of my thoughts. We're still range bound. So we'll see how price respects this area. And if we form another range, I'll do the same thing that I've got in the green and play it that way. So yeah, I know I said I would talk about some altcoins that I'm looking at in late 2023, late 2024, or early 2024 that I'd like to scale into. But I want to preference this here. Altcoins have not seen the worst of the pain yet. I believe Bitcoin's still going to go lower given the macroeconomic environment and the fact that we are in a recession and that equities are going to hit new lows. High beta assets like Bitcoin, very, very high volatility. They're going to see even more downside. So I've got the $12,000, $10,000 to $12,000 area for Bitcoin on my radar. If we get there, maybe we go lower, maybe we don't quite get that far, but generally that would be my area where I would consider, heavily stocking up on the spot. You're going to be able to hold on to that for, if you think it's going to 100K, that's almost a 10X. It goes back to 60, it's a 5X. So I think I would be comfortable with at least a 5X on my money for Bitcoin, but most likely more. And then to preface again with alts, there's going to be even more downside. If Bitcoin's going to go down another 25, 30%, most alts are going to see at least another 50% drop. Some 75, some another 90%. So let's just, you got to manage your risk and you got to understand the environment, how these coins move with relation to the overall market, how big they are. The liquidity in all markets is way, way down. So these moves are going to be a lot faster and a lot harsher than they have been. And I know I said that before, but just let's keep that in mind. So I guess Ethereum is the big one. And that's like the second most important crypto right now. And we're just going to look at these from a higher time frame because I kind of want to discuss some of these ranges that I've been talking about as far as being able to buy spot positions. We're still trading within supply and demand here. Again, big range. But ultimately, I'd like to see some sort of sweep down beneath these range lows. If I just zoom out a little bit more, the 2021 yearly open is an area where I have got my eyes on big time. And that is going to be, let's call it December 2021 yearly open, right around $712. This kind of is a fair value gap here in itself. We just got bought up back in June when the whole market crashed. Ethereum back to 2K, slow bleed with some rallies in here. So I'd like to see price trade this $700 mark. If not a dip below, maybe we get a 650, 600. That would be the area that I'm looking for. But again, for now, for trading, this is the macro range, and within there are microstructures that you can play for profit. Another one that I like is going to be Mr. Binance Coin, CZ's project himself, his baby. This one, it's very interesting to look at. I'm just going to look at this from a weekly chart perspective. So rapid price expansion early 2021, crypto popularity through the roof. The beginning of the liquidity injection from the Fed, the popularity of crypto exploded. People were deciding to put their money in it as there is a lot of risk, and people see what happened back in 2017, 2018. I think they get the same thing. So absolute rapid price expansion from a few dollars, up to 600, almost $700 per Binance for BNB. And as the rest of the market has sold off and absolutely wiped some of their short-term lows. Like Bitcoin, we had the 30K low in or 28,000 low in May of 2021, where price went to 69,000, and now we're back down at 17,000. So price absolutely wiped that low. With BNB, nothing really happened. No new lows really have been made, below 190 bucks. So this is something that I've been looking at, and I'm very skeptical. I mean, I like Binance. It's very big. It's the most popular exchange, most traded volume, most users, and all these other exchanges are going down. So I don't want to say that I think Binance is going to be the next one, but it's always a possibility. They seem to be in the best position to not have that happen, or to become the quote unquote. I'm not going to say monopoly, even though that's kind of what they're becoming, but they're in the best position to dominate the crypto exchange industry. But I think if we get a melt on Bitcoin and other cryptos, if we get some news, possibly of Binance being insolvent or them breaking some regulations, because I mean, they're not really regulated too well in the US. They are a Chinese-based firm. But if we get a piece of news that sends us below 190, I mean, this thing is going back to the depths of early 2021, less than triple digits. I mean, ultimately, I think the area that I liked as far as, being a great spot to buy BNB is going to be this area right here. There was some consolidation in here between 110 and 150, we'll call it. And I'll change the color. I'll just make it gray, or let's make it green. There's that, and then, I mean, if you want to get a little bit finer, there's some more consolidation down here, 75 bucks. But I mean, if we get that, I think that, and Binance gets cleared of, whatever accusations that might arise, Binance is going to be one that we got to look out for. They've got their own chain, the BSC chain. So Ethereum's got their ERC network where developers are building and trying to optimize the Ethereum ecosystem. Binance has their own version called BSC, and it's got the second most developers of all blockchain ecosystems. And considering that its primary use is for the Binance exchange, that is, something that we still got to keep in mind. Like, those developers all have to leave if you think that this ecosystem is not going to be here in the next 10 years. Those developers are going to have to migrate elsewhere. So with that being said, I don't think Binance is going to, trade single digits ever again. But I would like to see a cleaner pullback to sweep a lot of these lows, into the 120s and possibly even the 75s, maybe meet in the middle at 100. That would be a great spot, I think, to just stack up your BNB, because ultimately, Binance's limit, its cap upside potential, it's got to be at least Ethereum, right? Especially if, the rate at which developers are migrating to Binance is greater than the rate at which others are going to Ethereum. So there's that. That's my take on there. And then talking about developers again, I know it's been scary. It's been really bad. FTX, Sam Bankman-Fried. It's been absolutely brutal. I still am a fan of Solana. Again, the developers, man, these developers they've been asked plenty of times. They don't want to leave. They're still building. They still got confidence in the network. I know there's been some problems, but the fact that these developers are sticking around gives me some hope that this network will survive. A coin doesn't run from, $1.50 up to 250 and then, doesn't see any glimmer of hope to the upside afterwards. Even with some bad news or a singular event taking place. Yeah, a lot of the coins were held by owners and investors. But those tokens they're released. A lot of them are released now. So maybe this is the area that, price is going to develop a range. I've had it marked out for a while. This range over here just extended it across, and now we seem to be trading back in the same range. And this is a little bit confusing again. Let's make this green. At a couple, when it first happened, I saw that price swept down here below our range. I did actually buy a good amount of spot Solana, and I sold it at $14 because I kind of questioned whether that this was going to be the final leg down. Considering Bitcoin still got a ways to go, I think that another 50% drop is inevitable. So I am targeting this demand zone here. We broke this microstructure in here with this last down candle. So I guess my next area to look out for is between $7.50 and $10. And we'll just see what happens there. If the global macroeconomic environment changes by the time price is down here, it's going to be a great opportunity to buy this crypto and hold on to it for a while. I think it's got a lot of upside potential. So we'll just have to wait and see. So there's Solana. One crypto that I actually also like a lot of you might not have heard of is Quant, QNT. This is not the right chart though. Let's take a look at KuCoin. Here we go. So similarly, I guess, to Binance and Solana, Quant was, I know the data only goes back to beginning of 2021, but I know people were talking about Quant when it was sub $10, got above the 20s, and then, range bound here, exploded all the way up to over $400, I believe, 429. So this is the picture that I've got here with Quant. It's basically an overledger network. It allows a lot of blockchain networks to operate on the same chain. So, you could use AVAX and Cardano on the Quant overledger, and the parties on both chains would be able to interact with one another. So I think that it's got a pretty nice use case. We saw the large sell-off, slow bleed through 2021 all the way through 2022. June, the first, major selling event where Bitcoin went to 17.6. We got a pierce into demand at around $45. And again, this was one that I happened to buy at 50, right around here, and I held on to it to 100. I didn't think that any sustained rally was going to happen. I was wrong. Bitcoin went to 25K after, so you could expect alts to rally even more. Quant went from $45 all the way up to 220, so that's like a 5x. I missed out on a little bit, but one thing that I liked that was hilarious was I've had this macro range mapped out probably since we were down here or over here even, because I was planning on buying some in here. This macro mid-range at 225 was exactly where the rally finished for Quant. And now we've continued to sell off, and we've formed a range here. But I think a move anywhere back into demand or a sweep of this range low into the high teens is going to be a great opportunity for people to buy QNT token. Again, this is not financial advice, any of this. Just some stuff that I'm looking out for in the crypto markets for late 2023, early 2024, the next halving. So we'll have to see. Again, do your own research. These are just some price action and important levels that I'm looking at in these. Let's go over one more. I got a fun one for you. I am a big fan of this crypto. It's called Cadena. Wrong chart. But yeah, basically Cadena is, I don't want to call it the last proof of work blockchain network, but it kind of is after the Ethereum switch to proof of stake. Basically Cadena, there's a the owner, the founder, is an ex-blockchain employee for JPM and created his own chain that basically allows for almost 500,000 transaction per second as far as scaling the network. So it's able to process transactions very quick and scale a lot of transactions to happen at the same time without failure. They haven't had failures yet. But again, small market cap, it's going to get hit a lot harder than any of the big ones. You're not going to find this one in the top 100 on, CoinGecko, CoinMarketCap at all. But yeah, you can mine it. The miners they used to be pretty expensive, back when Cadena was in the 20s, high 20s, mid 20s. But now I'm sure that they're falling down as, electricity prices are going up. Miners, even Bitcoin miners, are becoming unprofitable. So we'll have to see what happens with them. But I marked out a range, this range in blue, and what do you know? We trade within this range for months. And then, FTX happens, slow breakdown, underside retest, boom, FTX happens. Had this range marked out over here. I drew this in after the fact, but it makes sense why, price was respected. So I actually, again, bought some here, 80 cents, wrote it up to 105. It wasn't really a huge move. Don't really like the price action now at $1. Might just hold on to it. I sold some of it. I got a little bit left. But I got a lot of high hopes for this project, being that it's proof of work and it's fast, really scalable, and fairly decentralized. So I don't know. The sky's the limit. It's got a good team. Developers, they're kind of slow, but they are doing some good things on there. So feel free to check out their website. But yeah, hopefully, we don't get a breakdown of 70 cents, which, ultimately we probably will. Then 35 cents is going to get revisited. But, a lot of exciting things to happen here in the new year as we approach 2023. But it's going to be a time of pain for most people that don't understand the current market conditions. But if you're smart and you preserve your capital, you're going to have the opportunities of a lifetime. So yeah, it's something that we're looking forward to at Crestview and Magnuson, personally, and our businesses, and all of my friends. They ask me about things, and I let them know my thoughts. Try to give out as much advice as I can, considering that this is my specialty. But yeah, without further ado, my name is Jake Meyer. This was episode 4 of Macro in the Metaverse, hosted by Crestview and Magnuson in the Crestview and Magnuson presentation room. Covered ES. We covered the trades that we took during the week, crypto included, and we covered some altcoins that I will be looking to scale into in late 2023 and early 2024. Thank you guys all for watching. Feel free to tune in. Next episode 5, should be a good one just like these. Without further ado, thank you. Like, comment, subscribe on YouTube, and share this with all your friends. Take care.